In Haryana, home buyers are left confused about the levy of value-added tax or VAT by their developers as they approach possession of their purchased property. Every developer is charging a different rate, and buyers who've already emptied their savings into their property are feeling the pinch with this sudden demand that runs into lakhs. What's the confusion over VAT? Are buyers liable to pay it, and how should it be calculated? Let's find out. Flats getting ready for possession in Gurgaon. But a tense standoff between real estate developers and allottees is stalling the handover. The deadlock is over who pays VAT or value-added tax and how much. Ajay Singhal here is close to getting the key to his flat. In the final demand letter, his developer has asked for an ad hoc advance as a bank guarantee. This is a precondition to giving possession till confusion prevails on how VAT is to be calculated in Haryana.
They are asking for an advance amount without giving us any clarity on, for example, when this amount will be settled. So how many years it will take. The second issue is that on this advance amount, will we get any interest or not? All these points. So since there is no clarity on this, and we will have to pay this amount to the builder, that is why we want to approach to the National Consumer Forum.
Haryana in the last 2 years has come out with 2 formulae to help builders calculate VAT on real estate transactions. But none seem to have worked practically. To match the 1% blanket rate of states like Maharashtra and Delhi, Haryana came out with a composition scheme in August 2014. It prescribed a 1% VAT on the total value effective April 2014. However, developers have rejected this scheme as it bars them from collecting this tax from buyers. It also taxes them extra if goods are bought from outside Haryana. And there is no amnesty for cases before 31st of March. So they came out with a new formula called the deductive method in July this year. It says subtract 25% of the land cost and 25% of the labor cost and levy VAT on the rest of it. But again, this fails because it has been enforced retrospectively. Developers say both schemes have opened a Pandora's box, especially for projects already delivered and registered where the developer has exited the maintenance.
VAT bills is, I have heard of developers being raised a demand of 20-30 crore rupees. With a retrospective effect from 2007-8 onwards. There has been huge, with multiple taxation, otherwise also GST, nothing happening on GST. This additional liability is coming in where even if we get it from the customers, it will take a while before we can collect it from the customers. And especially with such a slow market, the moment you raise a demand to a customer, he'll come out with multiple excuses not to pay it. And the department is breathing down your neck. They say that we need the money right away.
So if developers are rightfully hedging their risks by seeking post-dated checks and fixed deposits from their allottees before letting them move in, should buyers be able to trust them?
So there might be some fears, whatever we are paying, whether it's being paid off to the department or not. Technically, that is something that the department's prerogative to look into. There are clear-cut laws which says that people who are collecting any VAT has to be paid it to the government.
In a sluggish market where deliveries are stuck due to various factors, the last thing the industry needs is unrealistic and ambiguous taxation that further erodes the trust deficit between developers and home buyers. With camera person AJ Joseph, Vasudha Sharma, NDTV. From the buyer to the developer, nobody seems to be spared from the confusion surrounding the imposition of VAT on property purchases in Haryana. We had indirect tax expert Ankit Gulgulia Jain in that report, and we got him to our studio here to answer some viewer queries. Ankit, thank you so much for joining us today.
Thank you so much, Vasudha.
So we have 2 viewers who have written in. Let's take up this first query by Nilima Chopra. She writes, I booked a unit in Urban Square, Gurgaon. I've made a full payment. The developer is withholding possession until VAT is paid. I'm resisting signing an indemnity letter. The builder is taking refuge in the clauses in the buyer's agreement. The builder states that the agreement is saying that taxes leviable in the future are to be borne by the buyer. What is the calculation for VAT? Is it based on the super area? The builder claims that this VAT demand is as per government notification, but is this a law yet? Can developers really demand this from us? Ankit, this seems to be the biggest question that home buyers in Haryana have on their mind. Do I even need to pay VAT? Can you clear the air, please?
See, Vasudha, as far as the VAT is concerned, you'll have to pay the VAT because the Supreme Court in 2013 in Larsen and Turbo have very clearly held that all the building contracts are in the nature of works contract. Now, if it is a works contract, then whatever law that is applicable in terms of service tax and VAT will all have to be paid by the concerned developers. Incidentally, what you see in the agreement to sell that is being executed by the developers is that all of them would actually be requiring the VAT liability to be borne ultimately by the customer. Now, essentially, indirect taxation is such that it's a destination-based consumption tax. At the same time, whether the developer will be able to recover it or not will be depending clearly on the terms on which the agreement to sell is executed. I'm assuming right now that very few developers would actually be afford to having an issue where they would have not binded their customer to not ultimately pay it. So in a normal sense, they would have actually binded the customers that whatever is the VAT liability that is going to come will be borne by them. Now, as far as the valuation is concerned, once we say that this is a freeze that the VAT will be payable, the next question that comes is what is the valuation? Now, valuation in Haryana is to some extent what I would say is the main nitty-gritty of the whole confusion today. The valuation is not a blanket valuation till date unless the developer would have opted for a specific lump sum composition scheme under Rule 49. Earlier to 31st of March 2014, they would have to opt for that scheme to be eligible to go under the valuation. So you need to understand what sort of a valuation will be done depending upon whether the developer has opted for that scheme or it has not opted for.
Okay. Also, Nilima says that her builder is asking her to sign an indemnity bond as a precondition to hand over possession. They're hedging their risks. What do you have to say about that? You're coming across many cases. Somebody is asking for a bank guarantee, a fixed deposit, an advance amount, and buyers are very anxious that should they give that amount or not.
See, there is no issue as far as whether that will be binding or not. It is binding because it's a Supreme Court judgment. So that is the law of the land right now. But what is essential is whether the developer is what valuation is asking for, what is not asking for. I presume that there is still a lot of litigation that might come in the future. So if an indemnity bond is given, that indemnity bond must speak of the fact that there must be a very clear and transparent mechanism in which the settlement of the final amounts will be done once the developer is able to negotiate out of the settlement or out of the judgments that the court is going to give in the future.
Okay.
So if the courts are giving a favorable judgment to the developer subsequently, whatever amount is being benefited out of that judgment should be passed on to the customers as well. That is how it should be.
All right. Let's move on to our other question, which came in from Colonel Basdev Singh. He writes, I booked an under construction flat in Gurgaon. I received the builder's notice recently for payment of VAT. The builder cites the 2013 order of the Supreme Court and which says that sale agreements executed before completion of a building are liable for VAT, as Ankit just explained. The transfer of property is to be read as sale of goods here. Is VAT applicable on under construction apartments? He wants to know. And he wants to know what is the applicability of VAT on the basic cost of the apartment, EDC, IDC, club subscription and maintenance security. Okay, Ankit, you spoke about how to calculate VAT. There are two formulas and this viewer wants to know on what components is VAT taxed.
Right. So for that, first of all, you have to see that whether the developer is taxable under which regime. To simplify the whole concern, I would actually distribute this whole discussion into two segments. One is that assumingly that the developer is registered under the composition scheme, and the second one is that he is not registered under the composition scheme and will face a normal assessment as any other dealer under Haryana VAT. For the first thing, which is the normal assessment right now, the basic cost of course is taxable because that has been cleared by the judiciary also, that everything that is in terms of the construction contract, if there is an agreement to sell that is executed prior to the completion certificate, that is liable to VAT. Second is coming to the other component, which is the EDC IDC. The EDC IDC is paid to the statutory authorities in terms of DTCP and the HUDAs and all being involved. There is a clear-cut demarcation under the law also that if there is any charge that is being paid by the developer directly to the statutory authorities and is able to substantiate to his concerned jurisdiction, then in that case there will be a deduction allowed. So under a normal assessment, EDC IDC technically becomes out of the scope. The third is the club membership. The club membership will depend upon the nature of the agreement to sell that you execute. If it's in the case of pure provision of services, which is in the terms of allowing the access to the club membership and all, that should ideally not form the part of the overall works contract. But most of the developers, they actually recover the construction cost also. So if they're recovering the construction cost, that is nothing but the nature of works contract. So to our understanding, that should be leviable to the works contract. The fourth you have said is maintenance security. Anything that is refundable is not a consideration. So when you actually start doing the computation, you do not take up anything which is not a part of the consideration for the works contract at the outset itself. Since it's not entering into the works contract ambit, you should not actually take up the valuation perspective for that.
Okay.
So this is how we freeze for the composition scheme. Going to the, this is for the normal scheme. Going to the composition scheme is something which says the total valuable consideration that is paid for the works contract. So again, yes, for the basic cost that will be coverable. For the EDC, IDC, there is utter confusion right now for the composition scheme.
Okay.
In our personal view, if the developer is maintaining an actual base, that whatever he has paid to the government is the same what is recovering from the customer also, being it in the nature of statutory levy, it should not form the part of the consideration for the works contract.
Okay.
In case if the government is looking for something else out of it, it might enter into some litigation tomorrow.
Yeah.
Now, importantly, when you talk about the club membership, again, we hold the same view what we hold for the normal assessment, and for the membership fees also, for the other thing also we hold the same view.
Okay.
That is that they will stand both similar in composition as well as normal assessment.
That's indirect tax expert and chartered accountant Ankit Gulgulia Jain sorting the grey areas of the Haryana VAT issue. The takeaway for buyers is that yes, you have to pay VAT. It's a destination-based consumption tax, which means the ultimate consumer has to bear the tax. Ankit, thank you so much for joining us.
Thank you.